Hello and welcome to Trading 5 Talents. Today's video, I want to give the final results for the 10-1-7 Iron Condor strategy. And just a brief recap, the 10 in the naming system simply means a 10 delta. And so 10 deltas on both sides. These are the short call and short put deltas. That means there's an 80% chance of winning this Iron Condor if it goes to expiration. The 1 simply means the width of the strikes on each side. So it's just a 1 strike wide Iron Condor. And then the 7 refers to the 7 DTE. So with this naming system, you could hopefully easily refer back to as to exactly what I'm doing with each of these setups. The testing spanned from November 7th all the way until December 5th, I believe. And you can see that here in the candlestick chart. I used SPY. And with this chart, I will show all of the trades, my entries and exits. Now, before I do that, I just want to mention that the exit strategy for the 10-1-7 Iron Condors was to either exit at 75% max profit or exit when the underlying price touched one of the short strikes, either the short call or the short put. And those are the rules for this setup that I have. And so that's what I'll be referring to as we go through this testing phase. So the first one is right here. And again, the upper bound is the short call, lower bound is the short put. Right side is the expiration date. Left side of the box is when I entered. I'm entering these around 2:30 p.m. Again, that's just what I started with when I first started testing these strategies, and I just wanted to keep that consistent and not introduce too many variables in my tests. So it's shaded red because I lost. As you can see, there was a major gap up in the middle, looks like right there on the 10th, and then the SPY price breached my short strike, my short call up here. And so that is where I exited for a loss. All right, if we go on to the next trade, it is also another loss because I entered this trade at the same time my other trade was going on. And that was before this big gap up. So I exited this trade just moments before my first trade. And so there was another loss right there. All right, third trade was a win. You can see there was a gap up. There's a slow trickle down, a gap up. And so there's a lot of gaps here. A lot of movement, but it all stayed within the range of my Iron Condor. And you can see these are very wide Iron Condors. And we'll look at the Google sheet and you can see exactly how wide these were. And we'll look at the actual numbers of profits and losses. But with this, I was able to exit right here. The volatility, for some reason, it just vanished. And I was able to exit early, maybe a day or two after I entered. All right, next one is right here. You can see this was a winner. I held it a little bit longer. The fifth one is a winner as well. Even though there's a gap down and a slow climb back up, it's still well within my range. And I exited right there. And you can see it's towards the expiration. So as we go on, this is something I'm noticing. It gets closer and closer to expiration. And I'm not sure if I like that with this strategy. All right, next one is here. And I'm exiting again a day before the expiration or on expiration day. You can see this one is a lot smaller width of the Iron Condor. That's probably because of the volatility went down in the market. And what happens here is I'm again exiting very close to the expiration. Here you could see this gap down. This is slow bleed. It sort of consolidates, and then there's this major rip in the market right here. But still, I was able to be profitable on this Iron Condor because once again, the strikes are so wide. I actually had to hold this one until expiration, and I let it expire worthless because it wasn't closing at my take profit price. All right, next one is right here. Similar setup. Almost identical strikes as the previous one, but I had to let it expire because it wasn't closing at my at my take profit price, which would be 75% of the max profit. And then my last one was a loss because I entered way back here when the price was relatively stable, but then after this major move upward, it hit my short call strike, and so that's when I exited for the loss. But if I would have kept it, of course, you would have seen that it would have been profitable. However, I'm following the rules, so I did not know that would happen. It definitely didn't happen over here for two of them, and those both would have been losers, I think. So that's why I made the rule, just exit for a loss once that short strike gets touched or challenged. All right, let's take a look at the numbers now of each of these trades. So remember, there's 10 trades in here. I know it's a very small testing window. It's not a really robust back test, but this is just what I've been doing because I want to get a sample of what's going on with these types of strategies. So let's take a look at the numbers. All right, so this is the 10-1-7 strategy. And you could see that I actually lost $31 over the course of all of these trades. Once again, I had 1, 2, 3 losers and I had 7 winners there. But you can see the wins, they were not large enough to offset these 3 losers. Now, my expected win rate is 80%. However, that's if you hold these iron condors to expiration, and that's if you live in an ideal market condition, which neither of those were the case. We were exiting early. We had a mental stop loss at the short strike touch, and we don't live in an ideal market condition. There's a lot of binary events, a lot of volatility going on, so that's why I took those losses. Now, if I scroll over here, I want to show you the average max profit that I had, and that was $12.10. These are only one strike wide condors, so that's $12.10 for every $100 of collateral. My short touch loss, according to Option Strat, on average would have been $34.30. So again, that's still about a 3-to-1 risk to reward strategy. I think that's, again, on par with the 10-3-7 strategy and much better than the 5-3-2 and the 5-1-2 strategies I was using before. So those numbers look pretty good to me. I'll see if I can improve them later on, but for now, that's what the numbers are. All right, so based on those 2 numbers and my actual win rate of $70, I should have only lost $18.20. However, I lost $31. And the reason why is because the losses that I sustained, $40, $36, and $40, are larger than what I had anticipated. So that is something to consider. If Option Strat is telling you, you might lose this amount when that short strike gets touched, that's if the volatility stays the same. Volatility won't stay the same, and so you don't know what it's going to be when that short strike gets touched, and so the loss might actually be greater than what you're anticipating, and that's what I found out here. All right, 10 trades, all Monday, Wednesday, Friday. Here's the SPY at entry for each of those trades, and then all of the strikes of my long puts, short calls, and long calls. And you can see the range here. So if I just highlight this, and come down here, you can see the average range for my iron condors is 27.9. So let's just say 28 strikes wide. Those are really wide iron condors. And again, you get that with the 10 delta. I'm satisfied with that width. I'm satisfied with an expected 80% win rate. And if I didn't trade during those, big moves, then this probably would have been a great strategy. So I'm fine with the width and with a 10 delta. So going forward, I don't think I'm going to move or change the deltas too much because, like I said, I think that's pretty good. Here are my entry prices. So you can see that the average price I was getting, or the average premium I was getting, was 16 cents or $16 per iron condor, but I'm not keeping that full $16. I'm actually exiting early, and these are my exit prices. Now, what I wanted you to note is the length of time that I'm holding these. So on my losers, I'm holding them 2, 3, 4 days. So early on in the trade, I'm getting out for a loss. But my other trades right here, the 3 and 4, those were pretty early. That's what I would like. If I could, I would like to exit about halfway until expiration, sort of with 3-4 days left until expiration. However, what the majority of my winners were 6 and 7 day trades. That means I'm exiting on the day of expiration, or I'm exiting the day before expiration. Or I'm letting them expire, as in the case right here. And this is something that I've noticed before, that maybe it's me, maybe it's Robinhood, maybe it's just the way that this is set up. But when you try to exit these iron condors for less than 5 cents, it's a little bit more difficult than it seems like exiting other types of trades. So if you have to hold until it's less than 5 cents, then maybe this might not be a good thing. And that's something that I need to address in my next variations of this strategy. All right, let's go back to the candlestick chart, and then we'll take a look at these losses a little bit more. All right, so here are the 10 trades, 3 losses, 7 winners. Now, just clearing off the chart, let's take a look at this gap right here. So this was a CPI report. This was released pre-market, and that's what that gap up was. So that's a binary event, okay? And this is when the market can swing wildly and dramatically in one direction based on a piece of data, and that's what happened right here. And with that move, that single report, it knocked out 2 of my iron condors because it gapped up and it continued that momentum upward and knocked out both of these at the same time. So there's 2 of my losers right there. Right? Over here is a PPI report. So the first was the consumer price index. The PPI is the producer price index. And you can see this was a gap down. It bled all day right here, and then it gapped up, but it still didn't really do much for the momentum. It just kept going down. That really didn't play a factor in my iron condors, which was good. I mean, you could see how wide this one was. So I started right here. I go up. Again, we're averaging around 28 strike width. So this is probably 14 strikes up and 14 strikes down. And so that little gap up and the bleed off, it didn't really affect it. That was a winner. All right. Over here is the FOMC. Yeah, this is that press release, and you can see there's a lot of consolidation right here, not a lot of movement, and then a gap down. And that one did not affect my iron condors because, once again, very wide strike. So that's fine. And then let's look right here. This is the Fed speaking. So Jay Powell gives his speech, and then the market just rallies. You can see the huge volume bar down here, and what that turned out to do to my iron condors, at least this one right here, it caused that one to lose. You know, the bottom line, and this is a common theme that I've been looking at throughout these last several backtests, is that these binary events, which seem to be happening a lot more frequently because of inflation, and therefore the Fed's strategy to combat inflation by raising or lowering interest rates, and by how much to lower it or raise it. All of that really causes some dramatic movement in the market. So avoiding these, again, is something that I know that I should be doing, but I, once again, want to understand how robust an iron condor strategy is, at least the ones that I'm testing, in a market that has these binary events. Because if you didn't have these binary events, then I'm sure that this would perform a lot better. So that's why I want to know. I want to get the baseline for these strategies. And that's why I'm doing them consecutively and not skipping any, because, again, I don't want to remove that variable. I want to know how it performs, just all the time. All right. So with that said, let's take a look at the conclusion. So overall, this one is okay, but I do like the 10371 better. So if you missed that video, please go check that one out, because that's the one I'm going to be moving forward with. And I'm going to be tweaking it a little bit, but I'm going to use that as the basis. So with this 10-1-7 strategy, there's still a wide profit range, as you saw, about 28 strikes wide, high chance of profit because of those 10 deltas. There's the same risk to reward ratio as the 10-3-7. So that's good. You do have consistent winners. However, it's the losers that really get you in trouble here. So the losses are higher than anticipated. So that is definitely a drawback to this strategy, and probably all the iron condor strategies. They're higher than you think they're going to be. Closing is more difficult, and I think that is one of the disadvantages of these one strike wide strategies. So the 5-1-2 or the 10-1-7 strategies, these one strike wide strategies. So you're either having to hold through that or up until that day of expiration, and it's more difficult to close because the price is so low, less than 5 cents, or you're having to let it expire, which you weren't anticipating doing. You wanted to exit earlier. So one strike wides, I don't know if I'm going to continue with those, because this is what I'm finding is that close is more difficult. So again, as with all of them, watch out for that short strike touch. Therefore, you avoid these binary events. Now, all of these issues that are bolded here, losses higher than anticipated, closing being more difficult, and binary events, all of those issues are going to be addressed in the next iron condor iteration. And I'm going to be using the 10-3-7 as the basis for that. So make sure you click on subscribe and you turn on the notifications so you can be notified of when that video comes out and when that strategy comes out. All right, so here are the comparisons for the 4 strategies that I've done so far. the 532, 512. So these are my 5 delta strategies, and I'm holding them through expiration. And you can see the risk to reward ratios are very high, 7 to 1 and 6 to 1. And what I'm really concerned with about those strategies is the auto close risk that Robinhood has. Even though they pushed it out another half hour, there's still going to be that risk. And also with the 512 strategy, because you're only having one strike wide condors, you'd want to scale up to make more money because you're only making $6.80 on average for every $100 you're using as collateral. Therefore, you're going to have more fees. And if you're on a broker that has fees, then that's really going to eat into your profits. In the 1037, you can see by raising that delta and moving out the expiration, we were able to get a lot more profit per $100, as well as decreasing the risk to reward ratio. However, as with all iron condors, because this is a neutral strategy, navigating those binary events is something that you really have to take into consideration and keep in mind. Something that I'm not doing in these tests, but something that I will be doing in the future. And once again, fees are going to be a big part of this, because with the 1037, the idea is to exit at 75% max profit. So now you're paying fees to enter the trade and paying fees to exit the trade. So if that's the case, then again, that's going to eat into your profits. Now with the 1017 strategy, the results of this video, you could see that the profits per $100 is about the same as a 1037 and slightly higher. Risk to reward is, about the same. However, it introduces another disadvantage over the 1037, and that is the auto close risk. Because the premiums are so small, around $16, and you're exiting around 4 cents, which is 75% of the max profit, it doesn't always close. And so you're going to either have to hold until expiration, or you're going to have that auto close risk, like the 532 and the 512 strategies. So right now it seems that the 1037 is superior to these other three, because we can fix the navigating the binary event issue. We can't really fix the fees if you're not on a commission-free broker, but at least you're able to take away one of the 2 disadvantages to that strategy. And so that's what I'm going to be working on with the next iteration, using the 1037 as my basis, and then adding in just a few more tweaks to it, and then see how that one performs. So again, make sure you click on the like button if you like these tests, click on the subscribe button, and turn on the notifications so you can know when that next video is coming out. Until next time, trade wisely and take care.